Okay, so what did the question give you?
Okay, so it said Emmett and Bernie are in partnership sharing profits and losses in a ratio of 3 to 2 respectively.
Okay, so partnership, that's important, that you should highlight. The ratio is also important because you've got A and B. So A and B, and they're sharing 3 to 2. So 3 over 5 will go to A, and 2 over 5 will go to B.
So the partnership statement of financial position at the 30th of June 2016 is as follows.
Great. So just to revise theory, financial position covers assets and liabilities. You've got non-current assets, current assets, capital, current accounts, liabilities, current and non-current, and you've got the total capital and liabilities.
The partners agreed to dissolve the partnership on the 30th of June 2016.
What does that
This
mean?
resulted in the following.
Yeah, dissolve means to end.
Yeah.
Okay, so they're ending the partnership and the following takes place. Okay, so what points do we have there?
Trade receivables realized at 12.6.
Okay, that's part of the dissolution. Okay, so just a note here, asterisk, revaluation slash valuation of assets and liabilities when the partnership ends. Okay, next one.
So what do they mean by it's realized at 12.6? What is that?
Meaning you're going to get 12,600 from your trade receivables. What are your current trade receivables? Where is it? There's it. 13,100.
Yeah.
So is it more or less?
Less.
Yes. Okay, so it's actually worth more in our books, but we're not going to get the full amount. So it's a revaluation basically.
Are we not getting the full amount because maybe bad debts and so on?
Possibly, bad debt could be a factor, but that's what they've told you. They've told you that the asset is only worth 12,600.
Okay. Trade payables we settled in full for 9.8.
Okay, so we're paying everything that we're owing. That's obvious.
Okay. Inventory was sold for 15,000.
Okay, so inventory was sold for more or less.
Yes.
Sold for less. So same thing again, the inventory is not worth as much. Okay, so we're just getting an idea of the scope. Okay, that's what I would do in the question. Always.
Machinery was sold for 35.
Okay, that you can put asset disposal next to that. That is going to affect the realization account. Why? Non-current assets that are bought and sold, the selling of non-current assets would be a disposal working asset realization.
Emmett agreed to take over the premises at an agreed valuation of 30,000.
Okay, if he's taking on a premise, that's part of the assets of the business. Okay, that's also disposal. You can also put disposal there. But for a non-current asset that's being given to a partner.
Bennu agreed to take over one of the motor vehicles.
There's another disposal.
Valuation of that.
Okay, so that's a disposal of a motor vehicle, but to a partner.
The remaining motor vehicle was sold for 12,000.
That's NB. All the other motor vehicles have been sold. So asset disposal again there. And then the last one.
The cost of dissolution before that.
Okay, so that's obviously the partnership ending. Okay, so first bit of required.
Prepare the revaluation account on the dissolution of the partnership.
Okay, the realization account.
Realization.
Okay, so draw a T account. Left hand side, right hand side. Let's make it big. For which assets though? Is this for asset realization or for the whole partnership as a whole? It looks like partnership as a whole actually. See, they said prepare the realization account for the dissolution of the partnership. Okay, so that means you're actually selling everything, not only the plant and equipment. And then the bottom of it was prepare the statement to show how much B will receive when the partnership bank account is closed. Okay. Alright, so realization account should be a T account. I know structure-wise they're quite particular when it comes to the accounting. So let's just get the right format. It should be assets on the left and then liabilities on the right, and then you should close off all the accounts. But let's just go back and revise and just get the realization accounts partnerships 222. 222. There we go. Yeah, it's normal. Okay, so there's nothing special there. And then you've got the statements. Yeah, that's fine. Okay, perfect. So what we've been doing is fine. We can keep it as T accounts, debit, credit, debit, credit. There's even a nice example there, debit, credit. Okay, perfect. So let's get easy marks. So this is realization, not for a separate item, it's for all items. This is for brackets, the closing off of a partnership. Right, so what are the assets that we've got in the partnership? Read number one, non-current asset. What's the first one?
Premises.
Okay, so premises is an asset. An asset has a debit balance. If you close off a debit balance, you're going to credit that specific account. Then you would have debited this specific account. So premises, general, all of these are general line items because it's just closing off the partnership, 40,000.
Do you need any dates?
You put everything on the last date. So when did they close the partnership?
On the 30th of June.
Yeah, you can put 30th of the 6th for all of it.
Okay, premises.
Next,
machinery.
Okay, machinery. How much?
Machinery was 32.
Next.
Okay, motor vehicles 18.
Good. What else?
Okay. Current assets inventory 18,600. Trade receivables 13,100.
Okay, these are all the easy marks. It's literally, do you know what these things are, and can you post them to the correct side of the realization accounts? 13,100.
I wasn't sure how to split it. That's why
Okay.
I forgot that assets and liabilities. Okay, capital account. I'm at 30,000.
Okay, these are capital accounts, got nothing to do with realization.
Okay.
Next, those are equity accounts. Current account also equity accounts.
So current accounts as well.
Yeah, current is short-term equity, day-to-day, short-term running the business. Capital, long-term.
Then the current liabilities.
Okay, that we need.
Trade payables.
Okay. How much?
Nothing.
What else?
Bank overdraft.
Okay, bank is bank. Bank is cash. You don't put bank there. No, bank is cash.
Put it to overdraft.
An overdraft just means you're owing the bank. Okay, you don't sell your bank overdraft. You use bank. So let's revise theory, NB. Okay, so obviously if you go back and you revise the theory, when dissolving a partnership, comma, there are 3 accounts that are used for inverted commas dissolving or closing partnership. Okay, what are the three accounts? Bank, because it's cash, you pay out the partners. Realization is for the workings. And capital accounts. That's it. Those are the three accounts. So everything else is closed off.
Okay.
Anything else?
Total capital numbers. No.
Okay, no, that's it. Yeah, so now we need to go line by line and we just need to record appropriately.
Trade receivables realized at 12.6.
Okay, so if you're realizing trade receivables, that would have debited your bank, so you would have credited your realization. Bank, brackets, asterisks, trade receivables. General journal. All of this is general journal. How much did you realize?
12.6.
Okay.
So how come we credited this now?
Because you would have debited the bank and you would have credited realization because you're closing the partnership. This is your working account. Realization is your working account. Everything sits in this account.
Okay. Trade payables were settled in full of 9.8.
Okay, so trade payables would have settled in full, so debit the bank, credit the bank, debit the realization. What else?
Inventory was sold for 15,000.
15,000. Okay, so debit the bank, credit the inventory. Well, credit this because there is no inventory. We're closing all the accounts. Inventory. Okay, 15.
Yeah. Okay. The machinery was sold for 35.
Okay, so debit the bank, credit the realization, machinery. Okay, this is how you do a dissolution. Okay, realization occurs when you sell something off, when you close something off. The total that we sold?
35.
Okay.
Okay. Admins agreed to take over the premises at an agreed valuation of 30,000.
Okay, so the premises is going to decrease. So his account will be, his account would have gone down. So you would have debited his capital and then you would have credited realization. So this would have been capital for A, just write the whole name, Amrit or whatever it was. Okay, A, capital A, asterisk, this is for the premises he took. And the premises he took was worth how much? What was it agreed on? 30,000. Looks like it. Is it? Just double check.
Yeah. Okay.
What else?
The new agreed to take over one of the motor vehicles at 6,500.
Okay, so his capital will decrease. So capital B, asterisk, this is for the motor vehicle. General journal. So if a partner is taking something from the business, here he specifically took a motor vehicle.
Yeah.
And what did they agree the price was?
6,500.
6,500.
Yes.
Okay. And then?
The remaining motor vehicle was sold for 12,000.
Okay, so then 12,000 would have been bank, asterisk, motor vehicles. This is what you sold. Okay, so the partner took some and the rest was sold.
The cost of dissolution was 63.
Okay, so the cost of dissolution, costs are debits and then you would have credited the bank. So dissolution costs 63.
Yeah. Okay, cool. Now just balance it all.
Yeah, that's it. Okay, now we need to balance this account off. So looking at this, remember who gets the benefits, if there is a benefit? The partners. So I need to check which side is bigger. If I sum up all of the debits, I get that. If I sum up all the credits, I get that. Which side's bigger? Here, the debits are bigger than the credits. Okay, this added all up adds up to 137. This added all up gives me 120. So this side is bigger. So the balancing figure is going to be an asterisk here. It'll be capital A. How much does A get? We wrote it down earlier. It was what, 3 over 2?
Yeah.
A gets 3 over 2. No, 3 over 5. Obviously, choose the other guy. Capital B asterisk 2 over 5. Okay, so what is the difference here? Well, let's check. The difference is 137,800 minus 120,900. $16,900. Okay, so 16,900 needs to go on both sides. Well, not both sides, just this side, but 3/5 of it goes to A, and 2/5 of it go to B. And then it should balance like that.
So B gets 0.
2/5 of, hold on, this times 2 divided by 5. Enter. Okay. Something happened with the calculation.
Okay, cool.
Right, that's it. What is the next question?
Prepare a statement to show how much Benu will receive when the partnership bank account is closed.
Okay, so this is looking at B's T accounts. Yeah, so we need to draw up a T account. Let's just say calculate how much he gets. Right, so the T account would be the easiest way to work out how much he's going to get. Okay, so capital B. Right, so what's their balance for capital B?
Pardon? Was their balance for capital B 20,000?
Okay, so that needs to go here. Balance brought down. Okay, good. We just need to put the 20 in here. Okay, and that's what he started with. Okay, so obviously we're looking at his account and we're looking at how is his account being affected when this dissolution is taking place. So we first need to look at anything specific to this guy. Yes, there was something that he took, right? Which point was that? 5 or 6? I think it's 6. So we need to put that in.
Okay.
What did 6 say again? Just read 6 again.
When you agree to take over one of the motor vehicles.
Okay. Yeah, so if he's taking on a motor vehicle, do you agree? Earlier we had this there, capital for B. This is what he's taking over So if he's taking over a motor vehicle, it's going to decrease his capital. Right, so here we write down realization. Okay, you can't write down capital and capital. You can't write motor vehicles because you're closing the partnership. So you write down realization and you write down the amount of 6.5. Okay, this is for the realization of the motor vehicle, i.e. the motor vehicle that he took. Okay, and then also have a look at his share of the loss. Okay, this also needs to go to his accounts. Okay, remember, you had a realization account that was balanced off. The difference here in terms of your debits and credits was an amount of 16,900. It was split 2/3 to B, 3/5 to A, and 2/5 to B. Okay, so that means that this is going to be debited. Okay, if this account is credited. So then you have realization again, but then this is for the share, his share of loss. It's a loss here actually. Okay, it's decreasing his capital, not increasing his capital. And it will be the same amount as what you got there earlier. Okay, there was nothing else that was mentioned here. No interest on capital, no salaries or wages, nothing like that. So it's just those 2 or 3 line items and then balance off his account. Okay, they say, is it before or after we pay?
We pay 70 to show how much we receive when the partnership bank account is closed.
Okay, so when the partnership bank account is closed. So we have to show the closing of the bank account. Okay, so do you agree this side's bigger? Oh, haven't closed off his current account. His current account had how much?
This is the new 18,400.
Okay, that needs to go there. That's good for his capital. Yeah, that's also an easy mark. Don't forget to put it in. Current accounts. B. Asterisk, general journal. We're closing off his current accounts. In his current account, he has money sitting there. 18,400. 18,400. Okay, now we can balance this account off. So this side is bigger. Sum up those 2 credits gives me that answer. And then this would be the balancing figure that the bank account would have paid him, basically. Right, so this would have been bank, asterisk, paying out partner. That's what that's for. General journal. Okay, and then everything closes off. So this minus that minus that. The difference is 25,140. Okay, and then you've closed off his account. Okay, that's his entitlements.
So you put that at the top, you don't do it as like a balance carry down overview.
No, yeah, because there is no partnership after this. Yeah. The partnership ends. It's gone. Okay, so all T accounts need to close off. So that theory is what we spoke about earlier here. The only 3 accounts you'll have open are these 3. Bank, realization, capital. That's it. So now this account no longer is open because they've closed the partnership. Only because this was a dissolution. Okay, they dissolved the partnership.
Okay.
Okay.
So question 3 is all done. So question 4.
Okay. Yeah, maybe those other questions that you've done. Did you find the memo? Okay. Let's carry on and try to finish the past paper.
Yeah.
The rest you can check it at home and have a look. Or bring it next time, I'll even check it for you, up to you. It's fine, you can decide. But let's carry on. Let's do some of the management accounting, because I know that is new. The financial accounting you should be okay with, because you've got that background from last year. The management accounting was new in this AS level subject rather than last year. Okay, so that you might or might not struggle with, depending. I do think it's worthwhile going through this with you. So let's look at question 4. What question number was this actually? I didn't put a number here. Just so we have the right references.
Question 2.
Okay. Question 2.
Okay. Ken produces components for mobile telephones. The following budgeted data is available for the year ending 31st of December 2018. Selling price, direct materials, direct labor, direct expenses.
Perfect,
per
yeah.
unit. Break-even point is 16,000 units.
Okay, so highlighting wise, you should highlight break-even point because I know that's a formula. Okay, then they've also given you some other stuff as well, which relates to what?
Okay, required. Calculate the budgeted fixed costs for the year ending 31st of December 2018.
Okay, so how can I get fixed costs if they don't give me fixed costs? I need a formula.
Fixed costs.
Yeah, so is there a formula with fixed costs?
Yeah.
Break-even points. Okay, so BEP brackets in units equals FC, fixed cost divided by open brackets, selling price minus variable cost, VC. Okay, I don't think acronyms are allowed. I don't know.
Yeah, I'm just putting this in there for study.
Yeah, but obviously that's the quick way of remembering it. Just write up the whole thing if you are writing this in the exam. Okay, and obviously the FC is what I'm looking for, the fixed costs. Okay, I can put in some of the values here. Do I know what the break-even is? Yes. How much is the break-even? We saw it earlier. Yeah, minus variable costs.
Okay, break-even point is 16,000.
Okay, so 16,000 equals, it's an equation, and you're solving for FC. Okay, the fixed cost, we don't know.
Selling price?
We do know. 5,25. Okay, variable costs, what are they?
Costs that can change.
Yes, so materials, labor, and expenses. Those are the VCs, variable costs. So in brackets for VC, we need to add up. Direct materials, how much?
0,50, 0,75, and 0,25.
Great, just add them all up. Close brackets. And let's solve. Okay, so now we need some maths. What did you get as variable costs? Well, what did you get as your fixed costs?
So it's 16,000 VC over 3.75. So we take this over, it becomes times. So 16 times 3.75. Fixed costs.
$60,000.
Yeah, 60,000.
Okay, that's it. Fixed costs. Right. Nice question. It just requires one formula.
So it would be dollars, yeah?
Yes.
Additional information. The budgeted profit for the year ending 31st of December 2018 is 75,000.
Okay, so important wise, that is budgeted profit. Profit, we know the difference between income and expenses.
What does that mean by budgeted profit? Meaning like their estimated profit to cover their costs?
Well, yes. Estimated everything. So estimated income minus estimated expenses gives you estimated profits.
Okay. Calculate for the year ended 31st of December 2018, budgeted number of units to be sold.
Okay, so they've told you what the budgeted profit is. They should have been more specific here in terms of what profit you're working out. Okay, there is probably only one profit you can work out here because they don't talk about other expenses. So asterisk, they should have maybe said gross profit here.
Profit for the year ending.
Profit for the year would be the ending, so then you have to assume that it's net profit. Okay, right, so it's fine. We can still work it out. All we need to do now is look at the budgeted figures. Right, so what are my sales? Well, my sales would be brackets. What did they want? Calculate the budgeted number of units to be sold. Okay, so that means if I've got income, let's rather write that heading, less expenses, that equals, how much was the budget profits?
75.
Okay. Right, so now I need to work out all my income and I need to minus all my expenses. What I don't know is the number of units to be sold. Okay, so it's an equation. Right, so let's first deal with income. Income would be what? Selling price times number of units. Do you agree? Okay, so my income would have been, how much do I sell these products for? $5.25. Well, $5.25. So $5.25x unknown. So 5,25x would have been my income. The selling price times the number of units. Okay, so I know my income. Now let's look at the expenses. Okay, what expenses does the business incur? Direct material, direct labor, and direct expenses. So we've got three. Direct material, labor, and what is the other one? Expenses. Okay, and direct materials is per unit. The per unit cost for the direct material was 0,5. The labor cost was 0,75. And the direct expenses was 0,25. Okay, so again, depending on how many units I'm selling, it'll be x, 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 0,5x, 0,75x, 0,25x. Right, because if I sell x number of units, I'm going to have that direct material cost, that labor cost, that direct expenses. Kind of like a word sum. I don't know if you remember any of your word sums from like long ago. They normally start word sums in like grade 8 or 9. Like where they give you a scenario and then you've got to interpret it. So it's similar to that. That's what I'm trying to relate it to. Okay, are there any other fixed costs? Yes, there are. Then there's still fixed. So those are variable, then there's fixed costs. And the fixed cost we just worked out, 60,000 from above, from A. Makes sense? Okay, so let's draw that income less expenses. Let's take that and let's get a formula for it. Okay, so if I write an equation for income minus expenses, my income is what? 5,25x minus expenses. What expenses do I have? 0.5x minus 0.75x minus 0.25x. Minus 60,000 fixed costs equal 75,000 profits. Okay, so income minus expenses. Okay, now it's basic mathematics, solve for x. Alright, let's quickly solve for x. Practice your math as well here. Let's check.
Just get 3.5. 5.25 plus
5.25 minus
minus 0.5 minus 0.7 minus 0.2. That's what I got. 3.7.
And that's it. Okay, so now we know how many units must be sold in order to make that profit. Okay, because remember, if I'm selling 36,000 units, I need to times it by the selling price to get the income, and I need to take all the costs into consideration. So for this business to generate a profit of 75,000, they need to sell 36,000 units. Okay, so it's more of a math question than an accounting question. Okay.
Okay, budgeted contribution to sales ratio.
Okay, so ratios require formulas. Let's go get it.
Budgeted contribution to sales.
Yeah. Do they give you a formula sheet for accounting or not?
No, I think so.
Okay, so that one you'll have to, yeah, so the ratios, let's go find the ratios. The ratios. Page 271.
I don't remember seeing the ratio. Budgeted contribution to sales. I don't remember seeing
Yeah, let's go look for it. It's been a while, so might have forgotten it. Okay, so the markup, profits, net asset turnover, turnover trade receivables, turnover, rate of turnover. Okay, that's not there, so it must be management accounting ratios. Okay, so let's go management accounting. Okay, so it's not in the ratio chapter for the financial accounting. It'll be then the management accounting. They probably put it under break-even point. Let's just find break-even point then. Okay, break-even point is on page 312. Yeah, that's management accounting. Okay. Yeah, there's the break-even point. We looked at it. They want a formula. There. There's it. Okay. Alright, so let's just write it down. What number is this? Okay, this is 2. So this was B1. Okay, so B1 we've done. B2. Okay, what is the formula? Let's see. C/S ratio equals total contribution, okay, total contribution divide total sales revenue. Okay, maybe just to revise some theory. contribution is on the page before. Let me show you that to you. Contribution here. The unit contribution method. Contribution refers to the difference between your sales and your variable cost. That's all. Is there a definition? No. Okay, no definition here.
What did you say? Contribution?
Yeah, it's the difference between your sales and your variable cost. That's all. Okay, so we need to work this out separately. Total contribution equals sales minus variable costs. Okay, the exam question is relating to what level? The one that we just worked out, right? Must be, because it's a continuation. This is all B, hey? Yes, that was B1. Okay, so now we know that there's 36,000 units. Okay, so total contribution would be sales of how much? What was the amount? 5.25, right? Was that the selling price? Just go back and check, just to make sure. 5.25. Okay, times how many units? 36,000. Close brackets. Then we've got variable costs. Okay, with the variable costs, we need to add up all the costs. So it'll be 0.5 plus 0.75 plus 0.25 close bracket times 36,000 units. Okay, there's total contribution. And so if I work that out, I'm multiplying close bracket, multiply here. Okay, there's it there, 135,000 total contribution.
But I'm just supposed to put it over sale revenue. I don't understand how you've laid it out.
Well, the sales we need to
Are you only working out the
contribution first, yeah.
Okay.
And then I'm going to work out the total sales revenue. Well, total sales revenue is just... I'm just working out different components, yeah.
Contribution equals sales minus variable cost. Sales minus variable costs. Okay, so total contribution equals to 5.25 times 36 minus
yeah, we have to add up all the variable costs and times it by the number of units. Okay, so now I know what the denominator, the numerator is. So if I highlight that, this we had to work out. Okay, now I can do the final answer. Okay, so total contribution is 135,000. The total sales revenue would just be 5.25 times 36,000 units. Like that. Okay, so CS over sales would equal that times 100 gives you a percentage. So it'll be 71. .24%. How many decimal places do they want? 2. So 43%.
Cool. Okay, state the meaning of this ratio.
That you can take straight out of here, copy paste. Right, this is sometimes called It's contribution to sales. So contribution is how much does the sale contribute to the business's profits in relation to the sale. So in other words, so for example, you're selling beauty services, okay? Those beauty services have costs that need to be recovered. You've got to cover variable costs as well as fixed costs. But we're looking at a ratio, so contribution. This 71.43% means for every sale, we're going to generate 71.43% as a contribution. Well, contribution towards the business. We still need to take the fixed cost into consideration. Okay, fixed costs aren't taken into consideration in contribution. Contribution is just selling price minus variable costs. Okay, break-even point takes fixed costs into consideration. Okay, so that's just theory. You can literally write down what you've got there.
This is sometimes called profit or volume method.
Yes.
So what's the name?
You can literally rewrite what you've got there. Because that's explaining what it is. See the meaning of CS ratio.
Called profit. Volume method. This method is used when there are a number of products being manufactured and sold, a marginal cost statement is given, the variable cost per unit and the selling price per unit are not available.
Now that's telling you when it will be used.
Yeah,
okay,
so that's saying what it means. So it's also sometimes called that.
Correct. You can say it's a relationship between the contribution that the business generates compared to the amount or number of sales units or number of units of sales.
It's a relationship
between the contribution made from selling compared to the number of units sold. Okay.